for all these techniques. Call 408-805-4653 or log on to navirajhomes.com. Right.
Hello, Bay Area. Welcome to the Real Estate Show, where real estate meets a financial strategy. Join me, the Bay Area realtor and a serial entrepreneur with a passion for helping you achieve your dreams through real estate. And today, I'm joined by a brilliant mind, Elder, the mastermind behind the CPA dude. These tax wizards are here to uncover the secrets of saving money, maximizing your investments, and navigating the financial side of real estate like a pro. From tax strategies to investment acts, we are in insights you won't find anywhere else. So buckle up, grab your coffee, and get ready to learn, laugh, and level up your real estate game. Let's dive in. Hello, Elder. Welcome to the show.
I'm Raj. Thank you very much for having me.
Listeners, we are live on Bali 92. We are live on Bali 92. If you have any questions, anything on the tax, already 2024 done, 2025 started, already close to a month is done. If you have any tax strategies you would like to know, any tax strategy strips, and if you like to know anything on the Bay Area real estate, you can give us a call. Our studio line numbers are 877 Bali 92, 877 Bali 92. Hilda, today, I think let's talk about two questions, right? Like one is, what is this short-term rental loophole? Like a lot of people are talking about. What is this short-term rental loophole, and how do you think a lot of investors can use this strategy? Let's assume, like, let me break it down to make it simple, right? There are two W2 income, husband and wife, right? How can they use this short-term rental loophole?
Definitely. No, I'm very happy you asked. So the short-term rental loophole applies to any person in the US. So if you're a full-time W-2 worker, you can still use the strategy to offset potentially as much as $600,000 of income in 2025. Can I share my screen?
Yeah, please go ahead. So listeners, if we are live on Bali 92.3 and all these sessions will be uploaded on YouTube also. If you have any further questions, you can give us a call. Our studio line numbers are 877 Bali 92. Anjali, what's the other alternative number? Like 877 Bali 92.
So to qualify for the short-term rental loophole, you need two qualifications. Number one, when you buy a property, it needs to be treated as a short-term rental, meaning that your average stay for the year needs to be 7 days or less. So, for example, one guest stays 2 days, one guest stays 10 days. You would add those up. You have 12 divided by the number of guests, which is 2. Your total is now 6, meaning you are below the 7-day average.
Okay, I think you can share the screen now, Elder, meanwhile. So listeners, we are live on Bali 92.3. Our studio line numbers are 877-265-5992. I'm talking about today, me and Elder, myself, realtor Nagraj Anaya, and I'm talking to Elder from a CPA dude, and we are trying to understand what are the tax saving strategies for the real estate and how does that work. Let's assume we both are on a W2 and would like to understand how to save it. Let's talk about it. So yeah, let's talk about the qualifications and other stuffs, Elder.
Definitely, yeah. So first one is you need an average stay of 7 days or less. If you use a platform like Airbnb or VRBO, this actually tracks the average days per stay for you, so you don't have to do anything. However, if you rent off platform, it's a good idea to have a tracker of each guest, how many days they stayed, and then what is the actual average. So that is qualification number one. The other qualification is an hours-based test. You need at least 100 hours and more than anyone else. Meaning that if you can have a property manager, no problem, but it's very important that you do not, the property manager does not work with you more than you. And then the hours begin as soon as the offer is accepted. So for example, let's say you want to buy a property. As soon as they say yes, the inspection, due diligence, negotiations, the closing all that would count towards the hours. And then staging the property, getting it ready for the Airbnb or VRBO, managing the property, managing vendors or cleaners, all of that would count towards the hours. Once you have 100 hours, more than anyone else, boom, you're good to go.
Oh, nice. See, I think listeners, if you had something new to things what we are discussing on that, and you can give us a call. We are live on a Bolly 92.3 right now. Our studio line number is 877 Bolly 92. And if you like to know how to build your wealth, let me give you the number again, 877 265 5992. If you like to know how to build your wealth, build for your future, this is the show you should not miss out. And this is the way you need to give us a call. Our studio line number is 877-265-5992. So this strategy, Elder, like applies for W2 incomes also, right? Both husband and wife working on a W2, they can use this strategy. So instead of renting out for long-term tenants, right?
Exactly. So if you're a high income W-2 couple, this would be a great strategy for you. You could even do multiple short-term rental loopholes. So for example, let's say you buy two properties, as long as you have this qualification for both properties, 7 days average stay or less, and 100 hours for each property, boom, you can get benefits from two properties.
Okay. So, for example, if somebody is having already a primary residence and they want to buy a second property, instead of being giving out for a long term, because if you give for a long term rental is more of a passive, right? That's what it is considered.
Exactly. If you're a W-2 income couple and you do a long-term or mid-term rental, it is considered a passive activity, meaning it will not reduce or impact your earned income or your W-2 income.
Okay. So there are two kinds. So one is active investment, another one is a passive investment.
That is correct. That is correct. And the short-term rental loophole, they call it a loophole because this is the only way that a W-2 person can treat real estate as an active business or trade.
Okay. So basically, this is short term rental can help us to treat as an active.
Yep, exactly right.
Okay, that's really good. That's a really good asset if somebody is considering what to do there on their investment properties, and if they're considering what are the ways to save on their W2 income, then they need to talk to experts like you. Listeners, the CPA due team, like especially led by Tony and Elder, they're helping out a lot of tech families, especially my lot of my clients have got benefited from them. You can set up always a free consultation with them, or if you have any questions still now, and if you would like to understand how to strategize your 2024 and 2024 taxes, you can give us a call. Our studio line numbers are 877-265-5992. Now, let's talk about one more thing, right, Elder, like 2024. If somebody has not planned very well and is already 2024 is done now, right? Like, what else they can do to reduce the tax burden for 2024? How do you suggest on that?
Definitely, yeah. So if you still want to reduce your tax burden in 2024 and you're a W-2 worker, there are still two big things that you could do. Number one is max out your HSA. So for example, a lot of you guys may have a high deductible healthcare plan, meaning you can contribute money into a health savings account. The health savings account is a really amazing account. It's the only account that gives you triple tax advantage. The limit is 88,300 for 2024, and you have until April 15th of this year to max it out for 2024. So the government gives you a full 4 months and 15 days to still max out this account. So the question is, what is the benefit of a health savings account or an HSA? Why would I do this? Why would I max it out? Well, number one, you get a deduction. So if you put the full 8,300 in there, boom, that is a write-off for you. Now, just a caveat, this limit is inclusive of your employer contribution. So if, for example, if your employer put in 3,000 for you, you couldn't put an additional 5,300 to meet that total 8,300 limit. So first benefit is a tax deduction. The second benefit is tax-free growth. So an HSA account, you can invest it into an ETF or a mutual fund, same as you would a 401k. So this account will just grow over time based on the stock market. So number two is tax-free growth. And then the third one is you can pull the money out anytime, tax-free with no penalty, as long as you have enough medical receipts. So for example, let's say you had medical expenses of $3,000
Okay.
in 2025, you can pull out $3,000 from your health savings account with no penalty and no tax.
Okay, let's revisit once again so that most of them might be not following. So basically you're saying if somebody has not did a tax strategy of 2024, still they can, the time is not up for them. They can invest $8,500 in the HSA account. That's the one of the way. And you are saying, well, one more thing is like whenever is needed, they can pull up to $3,000. Is that correction is correct?
They can pull out as much as they
As
want
much as okay.
based on their medical bills. So if you incurred, for example, $3,000 of medical expenses, you can pull that money out anytime. However, most advisors would tell you to pay out of pocket, save the receipts, don't pull the money out unless you really, really need it, or until you're close to retirement. Why? Because the money grows tax-free, right? If you invest into a fund, it'll grow tax-free with the market. So instead of pulling the money out, let it go, let it grow tax-free, pay out of pocket. Once you hit 50, 60, and you really need that money for retirement, or you just want that money, that's when you submit all of your receipts from many decades ago and pull that entire money out with no tax, no penalty.
Wow. So that's a great strategy. Listeners, myself, Realtor Nagaraj Anaya, and today I'm talking to Elder from CPA Dude, where like Elder and his team has helped a lot of families to save on the tax strategies. And if you have any questions, we are live right now on Wally 92.3, and you can give us a call. Anything on the Bay Area real estate, anything on your investment properties, how do you want to handle if you're planning to buy your investment properties, and how does it taxes helps you out, or how does it plan out? And if you're like to know more about, you can give us a call. Our studio line numbers are 877-265-5992, 877-265-5992. So is that the only one for the 2024, or anything else we can do it for if somebody else?
There is something else. So, for example, if you're a W-2 couple or if you're a single person, if you're a W-2 couple and you're making below 250,000 in a year, you can still max out your traditional IRA. So if there's two of you, you can just put in $7,000 each into a traditional IRA account to reduce your W-2 income. And the deadline for this is also April 15th. So you have 4 months and 15 days to still open up a traditional IRA, put in $7,000 each, and reduce your taxable income by $14,000 for 2024.
Okay, so you can do two things. One is the HSA account, second is the IRA. So that both are the great benefits for that. So, and one more thing, right? Like I think before we talk more about this, let's take a break now, Anjali, and we'll come back soon. Don't go anywhere.
If you are selling your Bay Area home, maximize your profit and minimize your stress with Nagraj Anaya, a mortgage and real estate expert. Nagraj Anaya understands the unique challenges Bay Area sellers face. He'll expertly price your home, market it to the right buyers, and negotiate the best possible deal. For a free consultation, call Nagraj Anaya today at 858-880-4577 or visit nagrajhomes.com.
Welcome back. So, listeners, myself, Realtor Nagaraj Anaya, and I'm talking to Elder on the tax related and tax saving strategies. And if you have any questions, we are still live on a Bali 92.3. Our studio line numbers are 877-265-5992. So, one thing what we discussed about 2024, let's talk about 2025. What are these things we need to be planning for 2025, Elder?
Definitely. So, as you know, we recently had an election and the new party won, right? The Republicans were in office. Now the Democrats are sorry, the Democrats were in office. Republicans now took over. Trump is now back in office. So what does this mean for tax policy, right? We do expect some changes in tax policy for 2025. One of the biggest changes that we expect to see is the increase in bonus depreciation. So as you recall, we were just talking about the short-term rental loophole.
Correct.
Short-term rental loophole allows you to take bonus depreciation or accelerate this depreciation so you can take more of it in year one versus spreading it out over the lifetime.
Yeah.
So The bonus depreciation benefit was being phased out. So it used to be 100%. In 2023, it was 80%. 2024, it was 60%. 2025, it should be 40%. However, we do expect this administration to be more business friendly and
Ah,
increase bonus depreciation to be back to 100%, which means that strategies like short-term rental loophole and buying properties will become all the more lucrative because now your benefit has heavily increased again.
wow, that's a great thing for say by buying an investment property. Then don't expect the real estate to go down in the Bay Area then.
Definitely. Don't expect real estate to really go down anywhere because with the short-term rental loophole, depending on which market you buy, you may be writing off your entire down payment.
Entire down payment can be written off.
Yes, that is a scenario. So, for example, let's say you buy a property where land is cheaper and you
Uh-huh.
allocate more value to structure. You may be in a position where the structure gives you so much bonus depreciation at 100% rate that you're pretty much writing off your entire down payment.
Wow, that's an awesome thing. Like I think in this context, I think then buying a condos might make better for a bonus depreciation, correct? Because the land values are lower there.
That is exactly true. So when you buy a condo, there really is no land value because there is no land. All of the price goes towards the structure, meaning that the whole entire value is structure and it can all be bonus depreciated.
Wow. So then anything else to watch out for 2025?
Definitely. So there's quite a lot. The other thing that we expect to see is the lifting or the repeal of the state and local tax cap.
Mm-hmm.
State and local tax cap. Right now, you're only allowed to deduct up to $10,000 of
Yeah.
state and
Yeah.
local tax, which is
Uh-huh.
very, very low, right? We live in California. We pay the highest income tax out of any state. We
Mm-hmm.
also have very, very high property taxes due to high property value,
Mm-hmm.
which means that almost all of us in the Bay Area are paying way more than $10,000 in state and local taxes.
Uh-huh.
So we're thinking that this cap will either be lifted at a greater amount or repealed altogether. If it's fully repealed, that means all of your property taxes, all of your state and local income taxes will be deducted from your federal income.
I think the same government, the Trump itself brought down to 10,000 cap, right? I remember it was in 2017 and 20, the same government brought it down to 10,000. Before that, I was so happy, like all my taxes, property taxes can be saved, but I think he brought it for 10,000. He didn't expect some, especially Bay Area prices are so expensive. It doesn't make sense. $10,000, we can't get anything.
Exactly. It doesn't make any sense. And I think the administration that brought it in, the Trump administration, realized that this honestly doesn't make sense. You
Mhm.
really penalize people that live in expensive areas like California or New York. That's why they want to lift it or repeal it so that people that live in the Bay Area or New York City can still keep on getting a good benefit.
So, listeners, see, do you think the Bay Area real estate prices will go down? Nah. Looking at this, what are the plannings happening for 2025? It makes more people to buy more houses. There is no way people wants to run away. If you have a question, still we are live and we are studio line numbers are 8772655992. Myself, Realtor Nagaraj and I'm talking to Elder from CPA Dude. We are here to build your wealth and give you strategies how you can do that. If you're missed or if you're basically missing out on the discussions what we are doing on, all these sessions will be uploaded on YouTube. Do watch out there also. So that's a great thing. Any other things you're expecting for 2025, Elder? These are the two things.
So those are the two things that we expect to happen. However, there are other things that may happen. So I'll just talk about the hypotheticals of what the administration wants to do. It doesn't mean that they will happen.
Yeah.
So for example, the administration wants to eliminate capital gains on US based cryptocurrencies. So cryptocurrency right now is super hot, right? Bitcoin just hit a new all-time high. All of the other alternative cryptocurrencies are going up as well.
Mhm.
The Trump administration is very, very bullish on cryptocurrencies, and they're thinking about eliminating capital gains tax on US-based cryptocurrencies.
I think already Trump Bitcoin might be making a waves already. Last week we saw that. There's a great news on that.
Definitely, definitely. So, I mean, we'll see what that'll happen. That's maybe like just a hypothetical. The other thing that they're thinking about doing is eliminating tax or reducing tax for overtime workers, right? Because if you're an overtime worker, the more you make, the more tax you pay. It may bump you up into a higher tax bracket. So the administration is hoping to incentivize people to work more, those that work an hourly rate, and give them a tax break based on their overtime pay.
Wow, that's great news. Because I was reading somewhere in the San Jose BART station, one employee who was working in a BART overtime, just he was doing a sweeping service. For that one itself, his overtime payment for last year was 250K.
Wow.
So for him, it's a great news. For or anybody who is doing overtime working, for them, it's a great news. Anyhow, it's an hypothetical, but let's see what all can be go into effect. And now,
Definitely.
yeah. So
And
now,
there's another big one too. They're talking about not taxing tips, not taxing tips. So we're getting a little tip heavy in America, right? You buy anything, you go anywhere, you're forced to pay a tip. So they're thinking about somehow eliminating tips from taxable income. And if you look at historically, taxing tips is honestly kind of new. They've only began doing this in the 80s. Pre-80s, tips were tax-free. If this does happen, expect to see tipping even more because people will want to get tipped income versus W-2 income if tipped income is tax-free.
wow, that's all the hypothetical makes good. It comes to implementation. It looks really interesting. So now changing the gaze. If somebody want to strategize on 2024, we talked about two things. But if they want somebody to set up an appointment with you and to understand, is it a tax filing for April is a better time, or delaying into next October? You would be happy to help them out, right? So that they can strategize the taxes better.
Definitely, yeah. So for 2024 tax strategy, there's really not much you could do because the year is over. I mentioned the HSA, I mentioned the IRA. However, tax planning needs to occur during the year, needs to occur during the year. So if you want to save money on taxes in 2025, you can go to join.thecpadude.com, join.thecpadude.com, book a time with us, and we can chat with you about your 2025 tax plan. In terms of 2024 tax filings, our internal due date is February 15th. So as long as you sign up by February 15th, give us all your information, we should be able to file you by the April 15th due date.
Okay. So, but if you still miss your February 15th, listeners, don't panic. Elder and this team can help you out to delay your taxes also, so that you can, I think, instead of rushing, I would tell them, lot of them, to plan and file it.
That is exactly right. So we always encourage clients to give us the most accurate information possible. If that takes more time, no problem. We can file an extension. This will extend you out until October 15th. You have an additional 6 months to file your return, get all your paperwork ready to make sure it's the most accurate and complete as possible. Now, there is a caveat to this. If you do extend beyond the 4/15 deadline, we will have to do a projection to make sure that you pay the estimated tax due. The IRS allows you an extension, but you need to pay your estimated tax due by 4/15.
Thank you so much, Elder. And if somebody wants to reach out, go to the cpadude.com and talk to Elder and set up an appointment with Elder in the stream. And if you want to set up an appointment with me, it's easy. It's a free consultation. Go to nagrajhomes.com, set up, go click on a WhatsApp icon, and you can connect with me. It's a free consultation when you're buying or selling on your real estate. If you want a second opinion about that, do reach out to me. Thank you so much, and have a wonderful day. Wonderful evening. Thank you.
The colder weather is here and it's time for. Thank you.